Hey guys, welcome to our podcast. This is Vishal Arolkar from Social Dime, and today we are going to be talking to Tushar Agrawal. Tushar is a partner at Dexter Angels. Dexter Angels is one of the angel investment firm which has a network of angel investors, and they provide capital to early stage startups. And today Tushar is going to throw some light on COVID-19 impact on the entire business ecosystem, startup community, and angel investment, etc. So let's get started. Hi Tushar.
Hey Vishal,
Yeah,
thanks for
hi.
inviting me, Vishal. Happy to be here.
Yeah, it's pleasure to have you. Welcome on the show. So before getting into the real conversation, I would like to share your. I would like you to share your journey with our audience. Like, what have you done? Before Dexter, what is your
Sure.
career has been? Throughout the year.
Sure, Vishal. Happy to do that. To give you a sense, after completing my MBA, I started in a bank, but recognized that I don't want to continue banking.
Okay.
This is when I ventured into venture capital, joined the family office of Dr. Anirudh Malpani, which is
Oh.
Solidarity, and worked there for almost 3.5 years. So I handled the angel investment portfolio there,
Mm-hmm.
uh, which was across 15 plus investments across sectors. So very diverse experience. So it gave me really a good opportunity to look at companies from a very long-term perspective
Mm-hmm.
because we were deploying patient capital and we were doing investing which was not focused on vanity metrics but on businesses which could generate cash.
Okay.
So that's a bit of contrarian view than the VC world today. And thus I learned a lot from my investing experience from Dr. Malpani himself.
Okay.
Uh, some great learnings which I carried along with me were, the importance of clear communication to set a really high integrity standard,
Mm-hmm.
not just for myself but also for the entrepreneurs I'm engaging with. Uh, and largely to I understood the investor founder relationship, which was uh, which cannot be viewed from the prism of opportunity itself, but has to be looked uh, as a long-term friendship of sorts. This is when, after some time working for around 3.5 years there, I decided to join at a senior role at Dexter Angels. So at Dexter Angels, it's again an angel investment network where I am building it up from scratch. Uh, yeah, so that has been my journey in a sense for last 6-7 years.
Interesting. Coming to Dexter Angels, can you just help us understand? Like, I have given an introduction about what a Dexter Angel is, but would like to go deep dive, as in what exactly Dexter Angels does?
Sure. So Dexter Angels, as you know, and as you can see from the name, is an angel investment network, right? We participate in angel rounds of early stage startups. Dexter Angels is a sister concern of Dexter Capital, which is an prominent investment bank in this industry, doing transactions mostly in Series B, Series C kind of stages. Uh, so at Dexter Angels, our guiding principle is to have skin in the game, to become an investment manager of choice, and to be entrepreneur friendly at the same time. When I say all this, what I mean is we invest our own capital alongside our investors.
Okay.
Plus, we are following a fee model where our interests are completely aligned with our investors. And our core DNA is to be friends with entrepreneurs. So we don't ask entrepreneurs to pay us anything to be there on a platform, right? Uh, so these are the principles with which we are building Dexter Angels. And I would say all of these principles actually differentiate us from the other networks in the industry.
Oh.
Yeah, so this is largely about Dexter Angels. We have a portfolio of 6 companies right now, and we are actively looking for, early stage startups to invest in.
Okay. So when you mention about companies, what are your investment preference? Like, what kind of industry segments do you generally look at when it comes to funding, startups?
So if you're asking about the sectors we invest in.
Yeah, as in, let's say if you are interested in a particular sector, like, real estate, fintech, edtech, which is a kind of, industry segment which you look forward to when it comes to funding, and especially at the times when, the current prices are on the verge.
Sure. So, I mean, when it comes to us, we are sort of sector agnostic because as an angel investor, it's very difficult to choose one or two particular sector and just focus on investing over there. So we are tech investors as well as we invest across consumer D2C brands. Uh, I mean, the sectors in which we invest in are largely the common sectors like health technology, education technology, financial technology. We like SaaS businesses. We also would take calls in deep technology basis our understanding of the business. Uh, in general, we are investing across sectors, but if you look at our, thesis, we have been increasingly, what do you say, interested in B2B SaaS companies because we firmly believe that digitization of SMEs in India is going to happen and is happening at this point of time as well. Another theme which we are extremely interested in is education technology in, let's say, tier 2 and tier 3 cities. When it comes to education technology, a lot of it is focused on, attracting the tier 1 crowd. But if you see the massive potential by sheer volume of the tier 2 and tier 3 segments, I think it's a massive opportunity to leverage. But it can't be just leveraged in an English only model. It has to be a vernacular model, right? So, I mean, these would be two themes which we are really, excited about right now. And in general, we would be investing, across sectors.
Okay. That is very interesting. We have seen that education technology, specifically at tech industry has been booming, at least in last couple of years. There has been a revolution, I would say, in the entire industry segment, and everyone, like, it's a hot topic of the, I would say, a year or two, because what happened is, like, after Byju's, every edtech platform, is growing. It's not just the one or two which have been made to the peak, but there are a lot of other platforms which are coming up. So, edtech is what, we are also looking forward to, when it comes to gauging the entire digital revolution, because even after COVID, we are seeing a different curve which is going through towards the digital adaptation. So that brings me to my next question. That due to this shutdown, there has been a different revolution I'm seeing in the entire digital ecosystem, because adaptation has increased. Previously, it was Geo which brought a revolution in the country. It brought internet till the tier 2, tier 3, even in rural areas. But that was out of impulse because it was a new thing. But now it's out of intent. In lockdown, you don't have choice. You have to use internet, to order your groceries or a lot of things, right? So there is a slightly shift in curve when it comes to adaptation, and it's growing very fast. So how do you look at the entire, ecosystem of digital, what do you say, when it comes to, using digital platforms and the adaptation when it comes to going on the entire digital platform? So what is your take on that?
So, to be honest, as a long-term investor, we see immense potential in the digital ecosystem of India, right? And if anything, COVID-19 is just going to push the digitalization of the economy. You're already seeing changes in customer behavior, right? As you rightly mentioned, people have started taking online classes from their home. Parents are now completely okay with the idea of their kids sitting in front of a laptop and attending classes, right? So, and in fact, many schools have decided to completely be digital this year because we don't know how long this COVID situation will continue for, right? So, when it comes to the theme of, digital ecosystem, I think Uh, there's no doubt that digital ecosystem is going to expand in a country like anything. People have now become increasingly comfortable with buying online, and I'm talking about people earlier who were not even sort of comfortable in searching online, right? So uh, and people have developed some sort of trust for online platforms as well. More people are consuming content online. Incumbents like corporates, SMEs, uh, will now be pushed to adopt digital software, digital payments, etc. Because uh, there is no way you can do away with not having any online footprint.
Yeah.
And this is going to be a massive sort of boost for Indian startup ecosystem. I have been part of this ecosystem for quite some time now. I mean, 4 5 years, and I must tell you, I have only seen this becoming stronger. Funding boom and bust will happen, but the number of entrepreneurs and the talent to do things well is just improving, and this will keep on improving. I'm totally certain of that.
Great. So, how do you feel, COVID-19 has affected the startup world? Which are the sectors which are, badly hit, for example? If you can give a few examples, it would be helpful.
Sure. So I'll give my perspective, right? So COVID-19, as we all know, has been a black swan event for all of us. It
Yeah.
has been and will continually change the course of event for industries across the globe. And to be honest, uncertainty around COVID-19 has not subsided at all. So as you can see, cases in India are, reaching a peak. WHO is saying there could be another surge in number of cases. So there can't be any definitive discussion around this. Uh, but there is one thing for sure, that this event will create a permanent effect in some of our habits for a really long time. People have become more concerned about personal hygiene, and hopefully they have become more concerned about their health as well. Uh, we have also started clearly delineating essential and non-essential goods and services, right? So when it comes to startup world, one has to understand startups are extremely fragile. Many of them really live on the edge, and thus shorter cash runways, which makes them extremely susceptible to events like COVID-19. So you can see, you have been hearing the news about layoffs, pay cuts. So this is going to happen, as in this event is going to increase the unemployment, right?
Yeah.
But when it comes to startups, they may be extremely fragile, but they are extremely nimble as well. And this is what their strength is, right? And that is why you would have seen several startups have pivoted to completely different businesses for the short term. Look
Yeah.
at the number of
Actually.
startups who have pivoted to delivering essential goods.
Hmm.
So there is another key point which you can learn from history, that many of the most valuable tech businesses of today had actually been started in the aftermath of the financial crisis of 2008, be it
Hmm.
Uber, WhatsApp, Slack, Instagram, whatnot.
Yeah.
So this is a moment of crisis, and this would result in a massive wave of entrepreneurship as well. As the world changes, entrepreneurs will identify new opportunities to tap into, and uh, they will be pushed to think through efficient business models,
Hmm.
because this whole event will make people very frugal, right?
Correct.
When you have plenty or more than enough, it is easy to splurge money, but splurging money increases problems rather than solving them.
Correct.
When you're pushed to the wall, and that is when you use your faculties the most to solve the problems efficiently. And this is what we are going to see a lot. Coming back to the question you asked, right, how it's going to affect different sectors, I think COVID-19 is going to prove an inflection point for tech businesses. Uh, be it education, be it healthcare, with people using Zoom like social media, our world has already changed. I think parents and students will become easily comfortable for the coming years to spend money in online education. When it comes to health, telemedicine should become increasingly acceptable. And I would feel that regulation will also move in favor of digitalization.
Hmm.
Uh, Another theme would be people becoming increasingly careful about their physical and mental wellness. Some of the industries, I would say, would also be negatively impacted, which would be largely industries uh, around, theaters, restaurants, travel. So this is going to be a mixed bag, and I think the ones who are going to leverage this period around the opportunities which it's throwing at them will the ones who will turn out to be really successful in the coming years.
Okay. So, as a startup, how should we survive this COVID? Because it's very important to understand. Okay, there are a lot of problems there. There is a lot of chaos out there because of COVID-19. But as a entrepreneur, if I have to create a roadmap in terms of how should be my next 3 months should be, or how should I survive basically the time which is under the shutdown. So, what is your take on that?
So the first thing is you have to stay home and you have to stay safe, right?
Sure.
We have already been in 3 months of lockdown, and I think we all need to be a little more patient and careful with the pandemic, right?
Yeah.
In terms of surviving for people like us, I would say bite the bullet. Your business may have been badly impacted, and you need to accept it. Uh, but while accepting it, you have to be also cognizant of your resources. You have to conserve them as much as possible. Cash is king. Try to save it as much as possible. Also, utilize this time to spend with your family and take care of your mental well-being. And you have to spend some quality time with yourself, right?
Yeah.
For entrepreneurs, I must say that I always get amazed by the entrepreneurship activities in our country. I
Hmm.
joined this industry because I wanted to be in the company of these talented, enterprising individuals, right? And I must say, I was blown off by the amount of talent and courage I've seen over the last 4 5 years.
Hmm.
See, entrepreneurship is not an easy path. It is very risky and a lonely journey, and one has to be equally mad and courageous to take this path. And the way Indian entrepreneurs have responded and taken on the problem and challenges of COVID 19 uh, and try to churn out solutions directly. I mean, be it PPE supplies, low cost ventilators, delivering food, medicine, helping people to reach their native places. I think it has been just amazing to watch this. And the level of collaboration amongst them is immense. So I think one key thing young entrepreneurs need to do is to keep their teams together.
Hmm.
Uh, and there will be concerns regarding, the future of employees. But I think this is the best time to use that ESOP pool which you may have created in your company, right?
Yeah.
Compensate your employees for the salary which you cannot pay to them right now by giving them ESOPs.
Hmm.
Uh, Another thing I would advise, entrepreneurs is to reach out to others in the ecosystem for help. And there are actually a lot of helping people in this industry who come and give you advice and who can also collaborate with you. So I think to survive this crisis, one has to be frugal. One has to be uh, working together with their teams, and one has to be open to seek help from others.
Hmm. So, what impact you feel COVID-19 will create on startup funding in this year or coming year?
Sure. So yeah, last year I guess the Indian startup ecosystem received around $15 billion in capital, right? When the global economy is going to be in recession, and if let's say recovery takes a really long time, then definitely there is going to be lack of capital inflow in the ecosystem, right? From what I've been seeing on the ground in the early stage ecosystem, the things are still in in full action. Investors are investing, rounds are happening, but there are a few changes, and one change is that many of the companies are now opening up to the idea of doing bridge rounds because they want to keep as much capital in their kitty as possible. The valuation expectations have sobered. Uh, so while there have been not much disruption capital wise, there have been disruption business wise. What I expect in the next 12 to 24 months is that funding will sober down. Late stage rounds may not happen at the same pace as they were happening, and this will always have a trickle down effect in all these stages of startup funding. But again, as we were discussing earlier, this both presents an opportunity for entrepreneurs as well as investors. Entrepreneurs to go down the drawing board, run really frugal operations, focus on the core problems they are solving, and leverage the opportunities which COVID and lockdown has created for them. For the investors who are deployed, it is time to focus more on their existing portfolio. For early stage investors who have capital to deploy, it is in fact a chance to get opportunities in startups which were not coming to them because of easy and large checks, being provided by late stage investors. So these times will also clear the rice from the shaft in the sense that you will get to know what are the anti-fragile businesses out there. You will get to know who are the founders who have been really resilient. And if you're betting on these businesses, I'm sure you will turn out much better off, in longer period of time.
Okay. So coming back to Dexter Angels, when it comes to evaluating pitches or deals, what is the exact process which Dexter Angel follows?
Yeah. So to put things in context for listeners, early stage startups, are companies which are either at prototype stage, pilot stage, or early revenue stage. So while evaluating startups in this stage, I think the biggest challenge one investor faces is the lack of data, which is really scarce. So typically, any early stage investor, I would say, would look at three things primarily. One is the market size of the opportunity. Second is the founding team, and third is the product which has been built and the execution that has been done till now. So I would rather say early stage investing is all about conviction, right? Different investors will have different view and different way of evaluating and judging businesses. But to be honest, all of them will take a call when they are sufficiently convinced about a particular venture. And this is highly subjective at times. So I would say this is how we have been evaluating startups. I mean, on the basis of the three things which I mentioned, which is the market size, the team, and the product.
Okay. And how do you gauge risk at early stage? Because I'm sure 90 out of 100, 90% of startups won't work. This is what the general myth is. So when it comes to you also must be getting, for example, 100 pitches a month or 2 months, whatever the timeline is. How do you gauge risk factor? Because it's very crucial for an investor to gauge a risk factor here, right? So yeah, just help us understand on that.
So early stage investing is risky, right? So you have to take certain risks, but you will have to also be cognizant of risk which you are taking, right? And as I learned over the period of time, early stage investing is also about mitigating these risks as you move from one stage to the other, right? So typically, if you take any startup, there are 4 or 5 type of risk which a early stage investor would be evaluating consciously or unconsciously while he's judging the company.
Okay.
One would be the technology risk, what stage the product development is, what is the probability that the product will mature into something which can be adopted by customers, what is the technology which is being used by incumbents, is this really an incremental 10x kind of technology, and or is it a technology which is going to get obsolete over time? So I think that is one key risk. when you're investing in tech companies. Other is market risk, how what do you say, developed the market is to accept the product. Is the timing right for the product, right? Uh, Next, you would look at team. Is the team coming along well? Do they have complementary skill sets to really build a business around the team? So when a startup is starting, it's actually a team, not even a company.
Yeah.
And slowly, that team work together to build a company, right? So, largely these would be the risk. Another risk could be the regulation risk. If the startup is, let's say, working in an industry which is highly regulated, how do you as an investor perceive the regulation to change over a period of time? So, I guess, these would be the risks which we would be assessing while evaluating a company.
Yeah, and do you get pitches where the founders are just on the idea stage, like they haven't been in a position where they have done something? It's just an idea stage, so it's very raw. So how
Right.
you exactly deal with those kind of pitches?
So, to be honest, even the prototype stage can be broken down into several parts, right? If somebody is just coming with an idea, with a pen and paper, it is very hard to take an investment call.
Absolutely.
But of course, you can give certain inputs on how they should be approaching their idea, and you can ask them to come in again, meet you after a few months, right? In general, an investor is looking for a deep customer insight, right? What is the insight that a founder has, which no one has in the industry right now? Another important question is, why is the founder building this business right now? Has there been some inflection point which has led to, starting of this venture? Like you can say, COVID-19 has created an inflection point for online education, and demonetization was an inflection point for digital payments. So I think when you are meeting a founder who's very early, these are the two key questions which you are trying to understand. Of course, you are also trying to understand what is the backstory. Why is the founder passionate about solving this problem, right? What is his vision? And as the business matures a bit, you can also evaluate general stuff like how is the team like, how is the co-founding team coming together, whether they have the ability, to convince people to come and join together them in a mission. Will they have the ability to pivot the business when the time comes? Right. So if you see from all of this, I think early stage investing is very qualitative in nature, and it is also based on the experience that an investor has had, and this is where investors try to create patterns, or you can say mental models in their mind, and they are just trying to connect the dots. And that is why you will see a lot of subjective decision making when a business doesn't have too much of numbers to show.
Correct. So just a question which is slightly on the opposite side of what we're discussing.
Right.
Why and when does an investor say no to an entrepreneur? What is that one reason that I think our listeners would be interested to know? What is that no factor when it comes into the picture?
To be honest, Vishal, there are several reasons to say no, and one of the hardest part of early stage investing is that you have to say no all the time, because you are seeing so many pitches. You have limited capital. You cannot be investing across lot of companies.
Correct.
So at a micro level, one would see hundreds of companies in a year. They would hardly choose to invest in 5 or 10. So the nature of VC business is such that one has to look for ventures, which can generate outsized returns. And thus the most important thing which an investor is looking, while evaluating these ventures, is the size of the market. And thus anybody who's operating in this industry, uh, in the startup world, and who's operating in a market which is, let's say, less than $1 billion, it's not attractive to VC investors at all. In fact, for some of the investors, the cutoff would be $5 to $10 billion of market size.
Oh,
So, uh, so I think market plays a key role. Second, as we already discussed, a stellar team really attracts investors. So if you are somebody who can blow the socks of investors, right? If you're charismatic, visionary, then of course the investors, and if they are bought into your vision, they get attracted to the venture. But a lot of time you will see what happens is people are operating in small industries, or they are not really deep into in their venture when they are going out and raising funds. And this doesn't generate enough confidence amongst the investors to take a call on these companies, right? I think another key soft, part which is played by the behavior of founders and teams, right? Because as I mentioned, investor-founder relationship is a long-term relationship, and you have to be able to develop, friendship amongst each other to really work well and gel well. So whenever you see, when you're evaluating companies, and if you see any signs of unresponsiveness, laid-back attitude, integrity issues, trust issues, I mean, these become red flags. And typically, consciously or unconsciously, an investor would stay away from investing in such businesses. So, I mean, to be honest, there are several reasons to say no to a venture. But these would be the large reasons why, and large and general reasons why an investor say a no. But one thing I would like to iterate over here, Vishal, I think fundraising should not be seen as seeking validation of your venture, right? One should raise funds only if their venture requires that amount of funding, right? Otherwise, you will be in the problem of plenty, and you may also be facing a problem of all the investors saying no to you. So, one suggestion which I will give to entrepreneurs is to think through their models. Do they really feel what they are building is VC funding business, or do they really feel that they want to take VC money, because it comes with a lot of responsibility as well. So my suggestion is to think through their model and accept that there is no stigma in operating smaller lifestyle businesses. If that is what you want to do and they are doing just fine for you. In fact, that would be a better choice instead of taking VC money for a business which cannot support VC funding more.
Great. So, what do you think recession is expected? A lot of speculation has been made around the whole pandemic that once it gets over, we are heading a recession. So
so I mean, I'm not an
whatever
so I'm
happens
not an
in
expert.
the country, everyone
Sure.
just come after the entire recession thing. Like whatever happens in the country, people are just heading towards the discussion key. There would be a recession. So how do you look at it from a holistic perspective?
So to state it up front, I'm not an expert in macroeconomics, right? But as much as I understand, this financial year, most of the economies are degrowing. So by definition, we are already in recession. And as you can see, countries are reporting massive job losses. COVID is, there is no, visibility of when the COVID situation will become normal. So most of the central banks have responded naturally by infusing liquidity in the market. But now the question is, how long are the economies going to remain shut? And how much time will it take for the overall economy to recover? So this massive leverage which has been created, right, on the government and the corporate side, will there be enough growth for companies to pay back their debt? Or are we going to see, defaults and massive deleveraging? So my sense is we are already in recession, no doubts about that. But there may be also a possibility that we may be pushed toward and economic depression.
Oh,
So we are in very challenging times, I would say.
okay, cool. Uh, it seems like we have come to the end. Just wanted to if you can share a message to our current entrepreneurs who are hearing this podcast.
Yeah, so I would like to say to all the entrepreneurs, right, and to all wannabe entrepreneurs as well, to believe in themselves. If
Okay.
they are going through a bad patch in their business, they will come out of it. I believe this is a good time for looking for problems which you want to solve and which you are really passionate about.
Hmm.
I think pandemic has also opened up the vulnerabilities in our country, like lack of medical facilities, poor emergency infra, how to take, so we are talking so much about education technology, but how do you take it to rural areas? How do you take
Hmm.
online education over there?
Correct.
So this is actually a very good time to scout for a problem which you want to solve.
Hmm.
Uh, Another message is I think entrepreneurship is a very lonely journey, and entrepreneurs need to take care of their mental well-being. Make a good network with fellow entrepreneurs and investors, and you should have those relationships where you are able to share your personal challenges with them. Stand by your team in these tough times. Getting business is going to be a challenge, but
Hmm.
retaining talent could also be a very big challenge. And that is why I suggested this is the right time to use your ESOP pool. Yeah, I would leave with these messages.
I think that was really very insightful. Thank you so much, Tushar, for making it today. So before leaving, if you can, just share your credentials. If some entrepreneurs would like to get in touch with you, how do they get in touch with you?
So yeah, it is very easy to get in touch with me. My email ID is listed on Dexter Angels website. It is tushar@dexterangels.com. Always open to have an interaction with entrepreneurs. Uh, yeah. And before leaving, thank you, Vishal, for having me on your show and wishing good health to you and to your viewers.
Awesome. Thank you so much, sir. Have a good day.
Thank you. Good day. Bye.